Good morning, guys. Welcome to this week's episode of the Market Watch, where we talk about the charts, trading opportunities, and the markets in general. Remember to subscribe, like, and also to follow us. So traders, we expect a volatile week in the markets this week, and our focus is primarily on the dollar, and this is simply because this week the Federal Reserve Bank of the United States will be releasing its Federal Open Market Committee meeting minutes. So of late, how the dollar has essentially been trading, investors have been pricing in the possibility of an interest rate cut come September, but the market generally is not expecting the Fed to cut interest rates come this FOMC meetings statement. So, and if you look at how the dollar essentially has been trading, the dollar has been on a downtrend, and we saw what we call in technical analysis a dead cat bounce up to around 104 level. But as of this Monday morning, the dollar has been easing, but generally the trend is downwards, and this is simply because investors are anticipating an interest rate cut come September. So traders and the investing universe in general, they'll be monitoring the data that will be coming out this week in order to evaluate whether the possibility of an interest rate cut will become even aggressive. That is, expectations of a cut, whether they'll become aggressive. So watch the dollar index, watch the key technical levels, and remember to manage your risk. What else will we be watching, guys? We'll be watching the Bank of Japan. The Bank of Japan is also anticipated to make an announcement about its future expectations of interest rates, and the market at the moment is expecting the Bank of Japan to hike interest rates, and this is the reason why you have been seeing a currency pair like the dollar yen selling off, and in general the yen has been quite stable and quite strong against most major currencies, and simply it's because the Bank of Japan is the only bank that is anticipated to diverge in terms of policy. So the Bank of Japan is anticipated to increase interest rates as we come towards the end of the second half of this year. So the dollar yen has been selling off across the board, and especially it has been selling off aggressively against the dollar, and currently it's trading at 153, basically from a high of 170. Besides from the fact that investors are watching or keeping a close look on the Bank of Japan and also the Federal Reserve Federal Open Market Committee meetings this week, investors are also keeping an eye on the Bank of England. So as of late, the narrative with the Bank of England essentially has been quite aggressive towards interest rate, delaying an interest rate cut, and that's the reason why we have seen the British pound versus the United States dollar rallying. But of late we have had a very deep pullback on the currency pair, and it will depend now going forward whether the Bank of England will still maintain its narrative of keeping an interest rate cut at hold, and then we should expect to see the British pound versus the dollar bouncing off the current levels of support. But if the narrative changes and the Bank of England starts sounding a little bit dovish, then traders should anticipate a break, the GBP versus the United States dollar, to break below its current level of support. So another news segment or data that investors will be focusing on this week is the famously known non-farm payrolls report. But the market's focus is really on the Federal Reserve. But anticipate volatility anyway when this piece of news comes out, that is on Friday. So with that, good luck, guys. Have a very happy trading week. Remember, we'll be doing these videos every morning, every week, so that we update you on the current developments in the market. Remember to subscribe or to like, and as well as if you want to start trading, you'll find a link on the description. You can go and click that link and we'll get to meet.